In this tutorial, I am going to show you how to use instant market execution and pending orders in the market. Before we discuss how to execute trades in the market, we need to understand the types of orders we have in the financial market. We have two types of order, right? In the financial market, we have number one, market order, or instant execution. Instant execution, right? Instant execution. You need to understand that, right? This is the first. Now we have the second. This is one, and the second is what we call the what? Pending orders. Pending orders, right? Now, market execution or instant execution is an entry to enter the market at the current price level. Take note of that. Let's wipe this out so I can give the definition. All right. Now, this order here is an order to buy or sell at current market price. Current market price. Current market price. Okay, so understand that. Do you understand that right now? Now, the second on the list is what we call the pending orders. Now, what is a pending order? A pending order this is an order. This order are used to buy or sell at a later price offer. Okay, a later price offer. This is what pending orders are being used to do. All right, now let's get to our price chart. Now let's say, for instance, on this price chart here, we want to buy directly. We are okay with the price at which USD JPY is being traded. Currently, let's just remove everything on this price chart. Let's remove everything on this price chart. Yes, good. Now, let's say, for example, this price chart here is trading at what? Let's get this off. It's trading at 152.262. If you are okay to buy this asset at this price, the type of order you use is what? Market entry. Market entry order or instant execution, because you are interested, you are okay to buy at this price. So you use market order or instant execution. This is the type of order you use right here. Now, for you to execute your instant buy or sell here, you use the instant execution. You move your cursor and select new order. Alternatively, you right click on your mouse or your cursor, your mouse, and you click on trading. But the fastest way is to click on new order. Once you click on new order, a new window will open up. Then you select your symbol. Then under the symbol, you have your instant execution. you make sure the instant execution is selected. Then you calculate the position size. We have already discussed how to calculate position size. If you are new to position size, if you do not know how to calculate your position size, refer to the description of this video. I have a link to guide you on how to calculate your position size, your risk, each money you allocate into the market. Now, right here, if we want to trade one lot, you choose one lot depending on your account size. Okay, now you set your stop loss. That is the second thing you have to do. Now, if we are looking to buy at this current market price of 152.287, then our stop loss should be below. So our stop loss has to be lower than 152. So our stop loss can be 151, or our stop loss can be what? 152, because 152.287 is greater than 152. So our stop loss can be at this level. All right. Now, if we are okay to buy, we now set what? Our stop loss to be maybe 152. We are okay with 152. Once we set that, then we set our TP. Let's say, for instance, our TP, we want our TP to be at what? 153. Then we set our TP to be 153. Since we are buying, our TP has to be above our entry or the current market price. So we set our TP to be what? 153. Once we set it, we click on our buy. Clicking on our buy right now, you can see our order has been filed. You can see our entry, our stop loss, and our TP. All right. So this is how we initiate buy and sell instant executions in the market. All right. Good. You can see that. So right now we have our orders being filled in the market. So the next thing we want to do right now in the market is to try the sell instant execution. Right, so let's just remove all these jargons right here. Let's remove all these jargons, all these, remove them, remove them. Okay, that's good. Place this right here. Now we want to sell in the market. Let's cancel this order we've opened. Let's cancel it. We cancel this order, USD yen, all the way out. Now let's say, for instance, let's go back right there and remove all this show trade history. We do not need it. And let's try to save this template so we do not have to go through the beginning again. Right, good. Now let's say, for instance, price is trading at this level of 152.277, and then we are okay to sell at this price level. The type of order we use is instant sell order. That means our entry will be here, our stop loss will be above since we are selling, and our take profit will be below. So this will be our TP and our stop loss above and our entry. Right, now let's wipe that out. Now we go back to our new order, we click on it. By default, instant execution is selected. We calculate our risk based on our account size. We choose our position size or volume. We set our stop loss. Our stop loss has to be above 152. Since we are selling, our stop loss have to be above 152.278. So our stop loss will be above. So let's use the 152.6. 152.6 is greater than 152.27. Now we set our stop loss. That is the next thing after we select our volume. Our stop loss will be 152.6. That is our stop loss. Next, we determine our take profit. If we are selling, our take profit has to be lower than our entry. So let's use the 150 level as our take profit. Now we set our take profit as 150. Once we set it there, Then we click on sell. You can see that sell. Now we have our what? Our entry at this zone, our stop loss above, and our TP below. You can see that. So this sell instant entry, we use a sell instant entry right here. You can see that. So the sell or buy instant entry helps up to quickly get into the market without any negotiation. Without what? Any negotiation. So you do not negotiate the price. It's like when you go to the market and you try to buy a shoe, and the seller of the shoe says that this shoe costs $100, and then you did not bargain the price, you didn't negotiate the price, you just said okay, I'm fine with $100, okay, I'm gonna pay it, and you pay it. So the type of order you use to buy is buy instant order. Buy instant order. Okay, good. And if you like to negotiate, the type of order you will use to negotiate price is what? The type of order you will use to negotiate the price of $100. If you like to buy it like maybe you would prefer to buy it like $70, the type of order you will use to buy this is what? Is what we are going to discuss later. Okay, that is good. Now let's say for instance you are this shoe seller, right? You are the seller here, and the buyer wants to pay for this shoe. The buyer wants to pay $100, and you as the seller, you are not willing to sell your price at $100. You can raise the price up. So the order you use to raise the price up to like $120 or $150 is what we are going to discuss in the next section. Right? Now I believe you now know the instant execution, which is an order to get into the market without negotiation or to sell without negotiation. The buy entry instant order is to buy without negotiation, and the sell instant order is to sell without negotiation. Now let's go to the negotiation orders. For you to negotiate, you either use the sell limit, sell stop, buy limit, buy stop. So understand these orders. These are what we call pending orders. So pending orders are kind of a tools. In simplest explanation, it's like tools, orders that you can use to negotiate price or to bid price. Alright? Or to find a better price offer, or to wait for confirmation. Now let's get into it. Now let's say for instance, in this market, the market is trading at 152.32, and you do not want to buy this market at 152.32. You believe that this market is trading at an expensive price level, just like the analog or the explanation analogy, the analogy I gave on the shoe of $100. Now let's say for instance, as this price is trading at 152.30, you prefer not to buy this at this level because it's too expensive. Now you want the price to come down to like maybe 151.70. Now the type of order you can use to buy cheaper at 151.70 is what we call the buy limit. It limits your expenditures. Limit means it reduces your expenditure. So you click on the new order, and then you go to the order window. You switch from instant execution, then you select pending order. Remember, limit and stop orders are under pending order. You select pending order, then under the pending order you have by default buy limit. So buy limit is what we like to use. Now the buy limit is selected by default. Now the next window, you select your position size, your volume based on your account balance. So let's use one lot, and the next thing is to set your stop loss before you even enter your price. Right now, what you need to do is to, where would you prefer to have your stop loss? Your stop loss must be below your limit, because you are trying to buy price at the price, you are trying to buy at the price of 151.700. so your stop loss should be below 151.700 since you are buying. So let's place our stop loss to be 151.3. 151 is lower than 151.700. Is that clear? Now what we do now is we set our what? Our stop loss to be 151.30, and then we now set our price entry to 151.700. now that will be 151.700. that is our entry. Now the next thing you want to do is to set your take profit. If you are buying cheaper or lower, what you need to do now is to set your TP at a higher price level, which is, we can set our TP to be at 153 price level, 0.00, 153.00. so we now set our TP to 153.00. so it means whenever the price move from 152.320 to 151.700, our order will be filled at a lower price level. So once you click on this order here, place, you will see the trade history on the price chart. You can see right now, this means price is trading at a higher level or at an expensive price which we are not interested to buy. It means whenever price push to this level, we will buy at this zone, and whenever price has been triggered at this zone, our stop loss will be lower and our TP is above. Right now, let's just try and clear off all the orders we have on this window. So we have some orders on this window, USD yen. Let's just clear this off. Now you can see it. So let's still set this to show our trade. Okay, we have the show the right bid price, right ask price. Okay, we have everything. Now at this level here, this is where our buy limit is. See our buy limit right here. Our stop loss are below and our TP is above. So whenever price comes into this level, our entry will be triggered. Is that clear? So that is how we trade the buy limits. Do we have question before I proceed further? If you have question, this is an avenue for you to ask your question. If you keep quiet, then the problem keeps quiet with you. Now ask your question before I proceed forward. If you do not understand, ask questions. If you like, keep quiet, the problem stays with you. Right? It means you know it. If you keep quiet, it means you know it. If you do not know it, raise up your hands and unmute your mic and talk. If you do not understand the concept, unmute your mic and talk. Let me know before I proceed to the next section. If you are watching on this video on Facebook, YouTube, Instagram, wherever you are watching, you can put a comment down if anything I've said you do not understand, and I'll attend to your comments. Thank you. Now let's move forward. Now let's take, for instance, let's clear off these orders right here on our price chart. Let's clear this off. These are pending order. I can see the pending order at the bottom. So let's clear everything off. Now let's say, for instance, as the market is trading at this level, we prefer to sell, but we do not want to sell. We do not want to sell at 152.33, right? Instead, we want to sell at a higher price. Someone wants to buy your item from 152, and then you do not want to sell it out at 152.33. Instead, you prefer to sell it at 153, which means you want to make more profit. So one of the orders you can use to sell is to do what? Sell limit. You use sell limit to limit your loss, to limit your what? Loss. So you use an order above, which we call sell limit. So the sell limit will be above, and the stop loss will be above our sell limit, and our profit will be what? Below. That is our TP, our take profit. Alright, so this is what the sell limit is all about. Now let's see how we can use these entries. Now what we need to do as a trader is to move our cursor to select on the new order, and we select our symbol, which is USD yen. By default it will be selected for us. Then we select on the instant execution and switch from instant execution to pending order. Once we select pending order, by default buy limit will be selected. Now we need to switch from buy limit to sell limit. Once we select sell limit, then we now do what? We select our position size. Let's use 1 lot. After we select our position size, which is the volume, the next thing you have to do first is to set your stop loss. Since you want to sell higher, your stop loss has to be above your sell limit. So we have our stop loss set to what? To 153. Now we set our stop loss at 153, and then our price entry, that is our sell limit, will be below our stop loss. So let's put our sell limit at 152.67. So now we proceed forward to go under the price. We set our sell limit under the price, which is 152.67. After we set that, then the final leg is to set our TP. Since we are selling at a higher level than the current market price, then our take profit will be below of our market price, and the sell limit, likewise our TP will be below our stop loss. Right? So now we set our TP. Let's place our TP at the price of 51 price level. Now what we do is we move on to the order window and we set 151. Once we do that, then we click on place. Once we click on place, you can see right now the order has been placed on our chart. Now we have our TP here, and we have our stop loss above, and we have our sell limit. You can see our sell limit acts at this level. This our sell limit right here. So when the market comes into these zones, what will happen? Our sell limit will be triggered. This is our sell limit at this price level right here. Now you can see that. So this is how you set your sell limit. Before we proceed forward, if you have any question, please ask your question. Ask your question. Ask your question. Ask your question before we proceed forward. Do we have any question? No, I believe you understand that concept. Now let's wipe this out. So we go to the trade and then we wipe this out. Okay, now let's talk about stop order. We've discussed sell limit, and we've discussed buy limit. Buy limit helps us to buy at a lower price level, lower price, right? And the sell limit helps us to sell at a higher price level. That is a summary. Now let's talk about stop orders. Now buy stop and sell stop, what are they all about? Now let's say for instance we want to use buy stop. As the market is selling at 152, maybe you believe that this asset or price is not yet giving you a reason for you to get in, because you believe this asset is not yet strengthened. And instead of you buying at 152, you believe that you prefer to buy when price get to a higher price level, you use the buy stop order. Now let's go to a price chart, which chart is kind of a lower, not close to resistance. Okay, I think this one right here is a great example for us. All right, let's just zoom in. Now let's say, for example, on this price chart, price is trading at 0.866 and I'm not comfortable to buy at 0.86. Instead, I want to buy at a higher price level of 0.867. 0.867 is greater than 0.8600. So an order you can use to buy at a higher price than the market price is buy stop. Now our entry will be at a higher price level. This is the current market price, and our stop loss will be below and our take profit will be above. Now for us to do this, what we have to do is to go to the price, to the order window, select on new order. Then on the order window right here, we switch from the instant execution to pending order. From pending order, we select buy stop. Once we select buy stop, we select our position size, and the next thing first is set your stop loss. Now let's place our stop loss right here at the price of 0.8650. 0.8650 is lesser than 0.8600. Likewise, it is lesser than 0.86700, which is our buy stop order. Now what we need to do is to set our stop loss to be 0.8650, which is lower than the current market price and our buy stop level. This is 0.8650. Once we set that, then the next thing is to set our stop entry level. Our stop entry level, this is it right here. This is at 0.8670. So we set our stop level, which is above the current market price, that is 0.86700. And then once we set that, then the next thing is we set our TP level. Our TP will be above our buy stop and our stop loss and the market entry. So let's place our take profit at the price of the 0.86820. 0.86820 is greater than our buy stop entry, which is 0.86700. Now we set our take profit, that will be 0.86820. Once we do that, then we click on what? Place order. Once we click on the place order, the order will be filled. You can see right now on this price chart, we have our stop loss right here, and then we have the market price at this level. We have our entry. See our entry. Our entry acts at this level. This is our buy stop. Buy stop. Right? Buy stop. B represent buy, and above we have our TP, take profit. You can see that. So whenever the market pushed into this level, an order will be filled for us automatically, even when we are not at the front of the chart. Now let's look out for the opposite, which is sell stop. So let's remove the order, the pending order of the sell stop. Right? So we remove that on our price chart. Okay, now once we remove that on our price chart, the next thing now is to set our stop, sell stop. Now what is the sell stop all about? The sell stop is an order. Let's say for instance, as the market is trading at this level, you prefer to sell at a lower price. The price is trading at 0. Let's wipe out. Okay, the price is trading at 0.866. So instead of trading or selling at 0.866, you prefer to sell it at a much cheaper price, which is 0.866. Now, no, let's make it a different focus so I can easily understand. 0.8655. You can see that. So instead of selling at 0.866, we prefer to sell at 0.85. You can put 0, right here. Okay. Now, we want to have our stop loss above the market price and our sell stop. This is our sell stop level. Our sell stop will be below the current market price, so our stop loss will be above, and our take profit will be lower. Our TP, let our TP be at the price of the 0.865, right? And our stop loss will be at 0.867. all right. So once we do that, now we set our entries. We click on the new order. We switch from the instant execution to pending order. From pending order, we select sell stop, and then we select our position size. The first thing is we set our stop loss. Our stop loss is 0.867. 0.867. And our price entry is we want to sell at the sell stop level, which is 0.8650. So 0.8650. And our take profit is at what? 0.865. Our take profit is 0.865. You can see that. Now once you set that, you click on place. You can see right now this order has been filled. Now we have our sell stop above, our stop loss above the market price, and we have our TP below, right? So this is how we set it, but I think we made a kind of an error right here. Let's modify it. You place your cursor on the modification, you click on modify. Our TP and our entry should be, our entry, we want our entry to be at, let's make our entry to be at 0.8664. So 0.8664. that is good. Modified. All right, the market has closed on Friday. Now take note of the time the Forex market closed. The Forex market closed by 10 p.m. on Friday. Sometimes the time might change to what? To 11 p.m. So this is how we trade in the financial market. Do we have any question?